Hello, everybody. So we are embarking on this earnings season, earnings for the first quarter of 2020. This is going to be very interesting because we have the coronavirus out there. I'm going to talk to you about some sectors, some ideas, some plays that you may potentially have going into earnings season or finishing out the busiest week of earnings season, which is coming up next week. Hello, everybody. My name is Paul Zachary Shelton Jr., and I'm the Chief Investment Officer of Warwick Shore Advisors. We are an investment management and wealth management firm located in Orlando, Florida, with clients all across the United States. If this is your first time seeing one of my videos or first time visiting our channel, I ask that you please hit the subscribe button, click the bell so that you can get updates every time I upload a new video. I like to upload regular videos about all things financial, including the financial markets, which are so dear and special to my heart. So today I just want to talk to you really quick about earnings season. So earnings season is what we're currently in right now at the end of every quarter. All the publicly traded companies report their financial earnings or their quarterly earnings for the year. And as of right now, going in with the coronavirus, we're seeing a significant hit. Many companies have pulled back on their guidance, and which means that they're saying that we no longer have the same projections that we had a year ago or even a quarter ago, based on all the changes that have happened significantly. We're at a point right now in our economy where we have nearly 20 million unemployed citizens in this country. That is a staggering number. That's a very high number. So how do you invest? How do you play earnings season when you have such a volatile issue out there that is not economic, like the coronavirus? Typically, when you're going into a global recession or in a global recession, things that will outperform are typically your value stocks. Those value stocks are the ones that pay the dividends, and they're a little bit safer investments for you to have in your portfolio. They're going to provide you with a nice, solid, and steady income stream, typically. Your growth stocks are the opposite of that. Growth stocks usually don't pay you that dividend and that income stream because they like to keep the money to themselves, and they use that money to reinvest it within the company for research and development, technology, or all sorts of things to help grow the company. Those growth stocks have been outperforming value stocks in the recent future, or recent past, I should say, and possibly in the near future, we're going to see some more outperformance of those growth stocks as well. So when you look at the Russell 1000, the indices as of the close of yesterday, which was April 23rd, the small cap stocks have severely underperformed large cap stocks. And when you drill that down to the next level, value has significantly underperformed growth stocks. And I'm looking at my notes right here. So it looks like large cap growth is down only right around 5.5% versus large cap value being down about 22%. The same kind of theme is there for small cap. When you look at the small cap value, it is down 34% versus small cap growth, which is down a little over 20%. So what is your play? How do you play this? How do you position your portfolio to strive and to take advantage of where we are in our economy right now? And if the coronavirus pandemic lasts longer than we anticipate that it will, what moves would you make in your portfolio? Or what things should you do in your portfolio? Typically in situations like this, it is wise to go towards value. Value has been significantly beat up, as I just shown here, year to date. And again, these are year to date numbers. Value has been significantly beat up. And when things are significantly beat up, there comes a point where it's potentially oversold, and it may be ripe for purchasing, ripe for investing, and it may be an opportunity to get into it. However, there are still a lot of unknowns out there. And one of the things that we're starting to see happening now is a lot of the larger publicly traded companies that are still classified as small businesses that receive part of the PPP loan and the initial loans that were given out under the CARES Act. Those businesses are starting to give back that money that they borrowed from the government, saying that we don't need it. They haven't said yet if they're going to keep employees, our employees are still going to be laid off. But a lot of them have given back the money and said, we're not going to use it, we don't want it, we won't take it. It's very unclear as to why they have done this, but it is kind of signaling that potentially those companies are stronger and healthier and are able to withstand whatever potentially is going to come about in this next wave that we're thinking that we're going to see in market volatility. So if it was me and I were building a portfolio right now, I think it would be best to lean towards safety, lean towards some of those defensive names in the near-term future if you're picking those stocks. Some of those names fall into the category of those value stocks, those stocks that have already been significantly beat up. If we do see increased volatility over the next couple months or so, or if we do, like some people are projecting, if we do see another round of spikes in coronaviruses, whether in the near-term future when the country opens back up, or in the intermediate term in the fall where we have a mixture of the flu and the coronavirus, there could additionally be some more trouble and more volatility in the market, and that could additionally cause for those value stocks to probably outperform the growth stocks. But nonetheless, as we come out of whatever it is we're in right now, of this global recession or however the market is behaving, typically growth stocks will perform better on your way out, on your exit out, and typically small cap stocks will perform better. So as we get closer to getting a remedy, I should say a vaccine for the coronavirus, I'm thinking that there's a potential play with some of the small cap areas and some of the growthy areas in our economy. Please leave a comment below. Let me know what your thoughts are. I'd like to hear how everyone is investing during this time of volatility. Stay safe and have a great and happy day.